Good morning. Thank you very much for joining me on this video. I want to talk to you this morning about income tax and handling the tax man. Kind of pertinent right now as we come into this time of year where we're going to be filing our income tax return and sending off some money to the government. I want to take you way back to the start of my real estate career, back over 40 years ago. Back then, we were not independent contractors, we were employees, but in fact, it was a strange thing that the brokers did not deduct at source. In other words, when you got paid a commission, they didn't take off anything for income tax, for unemployment insurance, or for Canada pension. Very much like it is today. So I set a goal for myself in my very first year in the business. I started in March, and I wanted to buy a property by the end of the year. I can be fairly disciplined, so I opened an account, and it was a combination of a savings account and a tax account. And I put a ton of money, as much money as I possibly could out of every commission check into that account. We were on a 50-50 split. The broker would take half, and at a minimum, a half of what I got went into that account. And I was on track. I bought a property. It was closing the end of the year in December. And I figured I had enough money in my account for the down payment for the house and for my income tax that I would owe. Well, I dealt with the Case Populaire. They were real good people to deal with. And they used an appraiser from Quebec. And the appraiser didn't really know prices and values. And he always appraised way high. That's a good problem to have. We never lost a deal because the appraisal came in too low. But the property I was buying, of course, he appraised it for more than I was paying for it. And the Case Populaire contacted me and they said, you know what, we'll give you 75% of either the appraised value or the purchase price, whichever's higher. So if you come up with a few thousand more dollars, you won't have to go CMHC, we'll give you a conventional mortgage. Well, I thought, I know where I can get the money, my savings tax account. So I just took the rest of the money in there that was earmarked for my income tax, added it to the money I had saved for my down payment, and bought the house. Early the next spring, I filed my income tax return. I owed them some money, didn't have the money, so I sent off the return and no check. I thought they'd be understanding. Well, they weren't. At least they weren't very sympathetic. I started getting very heavy-handed letters, pay up the money you owe us. I had a good friend, Sam Stevens, who owned a lumber yard, a very prosperous man, a friend of mine, and I was sitting in his office one day and we were shooting the breeze, talking about this and that, and the topic of income tax came up. And he mentioned to me he was getting very heavy-handed letters from Revenue Canada to pay his income tax. I said, yeah, I'm getting the same things. I'm kind of ignoring them. He said, I was too, till they stepped in and froze every one of my bank accounts. He said they froze my personal accounts, they froze my business account. He said they would have put me out of business if I didn't have enough money. Fortunately, I did, and paid my tax up. Well, I didn't have enough money. I got on the phone real quick, called Revenue Canada, groveled a little bit, told them I didn't have the money, and we worked out a payment plan. And one of the things that the rep from Revenue Canada told me, it stuck with me. He said, I want you to stick to this plan. But he said, if you can't, contact us. He said, where we get really upset is where we have to chase you because you're not following up and contacting us. So he said, stay in touch, let us know where you're working at, how it's coming, and we'll work with you. And I decided I was never, ever going to get in this jam again. And I haven't. I'll talk a little bit more about that later. But moving the clock ahead, I moved to St. Catharines, opened up Remax Garden City in 1984. And as we got into the latter part of the 80s, the market got very, very robust. In fact, 1989 was a banner year. And then 1990 came along, and we hit a brick wall. But there's another thing that happened that's very interesting in 1990, and that is that we became independent contractors as opposed to employees. Unlike when I first started, at this time up until 1990, the employer broker was deducting at source. And so when you got your check, you'd start at the start of the year guesstimating what your income would be, and we'd fill out a form, and that's what you get taken off every check. And so your income tax was being sent off to Revenue Canada on a regular basis. Well, come 1990, that stopped. Now everybody became independent contractor, and it was back to what I experienced, where it was up to the salesperson to handle his own tax issues. And all of a sudden, the market had very, very much slowed down. We were living with the income level of 1989, but we were experiencing the income level of 1990. The Harvard School of Business, some years ago, conducted an interesting study. They got a focus group of 1,000 people who were earning $50,000 a year each. And they asked them this question. They said, how much money would you have to earn in order to live the American dream? They didn't say what it was, they just asked that question. And then they took the answers of each one, added them all together, divided by 1,000, and came up with the average. And the average came in at $100,000, twice what they were earning. So then they got a focus group of 1,000 people who were earning $100,000. They asked them the same question: how much money would you have to earn to live the American dream? And they took all the answers, they added them all up, they divided by 1,000. This time the answer came out at $200,000. So it seemed that it didn't matter what somebody was earning, they were living at that level, and they needed that twice that level to enter into the American dream, or to have all the extras, to buy the cars, take the vacations, move up in the type of house they want to live, and so on. And so the problem we ran into in 1990 is agents were living on a 1989 income and experiencing a 1990 income. Well, they took a 30% hit. And they thought, where in the world am I going to make up that 30%? Because I need it just to live. I don't have any surplus. They thought, I know where I can get it. My tax account. I'm not having to pay income tax on every commission check. And so I've got that much more disposable income, and they disposed of it. And come tax time, they ran into one of two problems. Either they owed the tax, didn't have it, like my first year experience, and now they had to the next year pay 2 years' taxes, the past year and the present year. And that's brutally hard to do, or they went bankrupt. And that brings us to today. We've experienced a phenomenal market in 2020 and a phenomenal market in 2021. But then 2022 started out incredibly strong, and come April, it started to slide. And I think most salespeople would have to say their income in 2022 wasn't as high as it was in 2021. And I would say we're kind of experiencing a doldrum of a market right now, with prices sliding and interest rates going up and all kinds of things conspiring against us. And the chances are the average income in 2023 is going to be down again. But once again, you control your income tax. And the danger is going to be use that tax money and figure Revenue Canada, they'll understand. Let me tell you, they don't understand. So let me give you the solution that I followed that's worked well for me, and I want to pass it along to you. What I did after that very first year is I started voluntarily remitting to Revenue Canada from every commission that I got in. And then when I changed over and became salaried, I worked out a plan so that my deduction at source was far higher than what my tax would be. So I knew that two things would happen. One, that I wouldn't get caught owing a bunch of money at the end of the year. And secondly, I would get a refund. And in fact, that's happened every year. Since that very first year, I've never had to cut a check to Revenue Canada when I file my income tax return. I've always got a refund, and the refund generally was large enough to use as a down payment to buy an investment property. So it funneled my investments. You say, well, how in the world are you going to do that? You know, the person that earns $50,000 could live at $50,000. Person that earned $100,000 could live at $100,000. What you need to do is ratchet it down, discipline yourself, tighten your belt, and send that money to Revenue Canada. Don't talk to your accountant about that. Your accountant will cringe. He'll say, don't do that. Revenue Canada won't pay you any interest, and they won't. They'll charge you if you owe them. But of course, that's one of the advantages of being government. You set the rules, you don't have to follow the rules. But the thing is, not only will they not pay you interest, but they won't give you the money back. So if halfway through the year, you decide you want to dip into that reserve account, if it's sitting in the bank, you can do it. And most of us can find places to spend surplus money. Guys, you collect things. Women, you enjoy experiencing things. We all have ways we like to spend the money. Well, if it's in Revenue Canada's hand, you just flat out can't get at it. So yes, you won't make any interest, but you also won't get caught in a bind where you are behind on your last year taxes and you're going to have to make up this year's taxes as well. You'll never, ever again dread income tax time. You look forward to a refund. I hope that makes sense. I want to thank you very much. I hope I'm not feeling like you're not feeling like I'm kind of beating you up. I'm not trying to do that, but I want to give you wise advice that will make all the difference moving forward when we're commissioned income. Thank you very much, and I look forward to talking to you again next week.